Good afternoon, everybody. Happy Friday from another lovely sunny Sydney winter's day. Another productive week with our stat testing of some of our strategies as well as improvement of our execution systems have been the focus. Let's hop straight into it. So five of the biggest developments for the course of the week. We've got New Zealand held interest rates steady at 5.5%. This is in light of inflation rolling or cooling a little bit in New Zealand, and it really does show that economists still continue to see that they consider inflation is still too high. However, they think pausing the interest rates at these levels is going to be the best thing to allow inflation to continue to cool from these levels. Chinese industrial production plummeted to 3.7% year on year. This is a really interesting development because it comes at the same time as the Chinese property sector continues to struggle. Expectations were for a reading of 4.3% year on year increase, and it came in at 3.7%. Like we mentioned last week, it was all to do with lackluster internal demand. Third thing, UK annual CPI year on year fell to 6.8%, down from 7.9%. So a big drop from the last reading last month. However, still a very high level of 6.8%. And this is coming off a very high base, so it's still increasing at quite a substantial rate. We can also see that a lot of the inflation pricing pressures now are flowing through to the all-important services sector, which provides further complications for the Bank of England. US retail sales rose 0.7% in July. So again, really interesting because you can see that through this data point, the US consumer is just continuing to spend money and are emptying their pockets in shops, which is very, very interesting. So it's something to continue to monitor. In Australia, the last point, we had Australian unemployment rate. It rose to 3.7%. Again, still off a very, very low base at 3.5% from last month. The most interesting point, in my opinion, was that the average monthly hours worked increased per family, and it just generally just shows that families are working more. They are returning to the workforce because they're trying to earn more money to offset the increases that they're seeing in the supermarket and at the gas tank and in inflation just in general. Here you can see our basket of futures currencies. You can see that wheat, coffee, palladium, natural gas, soybean, meal all experienced a lot of volatility on the downside. Orange juice, after further things about crops coming out of the east coast of the US, as well as tsunamis, tornado worries, saw some big price action there over the last week. But the most interesting thing, and this follows the same thing that I've been talking about for the last couple of weeks, is this: the 30-year bonds has continued to drop, down 2.49% week on week. Very interesting, just showing that interest rates, expectations for interest rates over the foreseeable future are increasing. You've also seen very poor periods of performance for equity markets, Euro stocks, US, Russell 2000, all performing very poorly over the last week. Heat map of the Australian share market can only be described in one word: bloodbath. Financials, materials all led the declines. Big four banks, BHP, Rio, and Fortescue were all down in excess of 3%. Really, if you're looking at this, the only bright spot really is CSL being up 2.9%. Goodman Group has had a very good week. Even today, it's up another 6.5%, 7%. And you've also seen Cochlear up about 7.5%. But other than that, the market, if you look at a price chart of the XJO for the last 3 years, 2 to 3 years, it's at the exact same place it was back then. So it hasn't really been doing an awful lot. An updated Frame Funds trend barometer, you can see that there's recently been a spike of constituents hitting new short-term highs and lows, very much relevant to our multi-strategy hedge fund. And you can also see long-term trends, the number of our constituents within our universe hitting long-term trends. Outside of that, it has been a very, very choppy week for the Australian market, and this last 3 days, 4 days of a sell-off in the Australian market has resulted in the Aussie market dropping about 4%, and it takes us back to the levels at the start of July, where it was again. But generally, as a general summary, it's volatile and it's rallying 10%, selling off 8%, rallying 4%, selling off 6%. So it's been a pretty wild ride. Anyway, hope you have a nice weekend and speak to you next week.